How to choose the best retirement plan that offers the greatest tax benefits. Using a tax advantage retirement plan to save for your golden years is always a fantastic idea. Find out how to choose the best retirement plan for your unique situation and learn how the fiscal benefits inherent in each plan, coupled with the compounding interest advantage of investing, becomes more powerful over time. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How you doing today? I'm doing fantastic. If you were to ask me, if you are doing as fantastic as I am, go grab a cup of coffee or tea or vodka and let's roll. Today we're having an important conversation around an equally salient topic: how to choose the best retirement plan that offers the greatest tax benefits. One, let's first talk a little bit about how tax benefits of top retirement plans work. There are myriads types of retirement plans to choose from, but the primary retirement savings vehicle, or the traditional IRA. IRA stands for individual retirement account. So you have a traditional IRA, you have a Roth IRA, a SEP IRA, and a 401k plan. Now, let's first dig a little deep into the primary features and benefits of each type of retirement plan. So let's start with traditional IRA. Now, if you have a traditional IRA, you fund the IRA with pre-tax dollars and earnings grow tax deferred. This means a contribution reduce taxable income during the calendar year contributions are made, or at least prior to the tax filing for the calendar year, right? So income taxes, you don't pay income taxes while funding the account, but you pay them when distribution or withdrawals are made, usually during your retirement years. So the maximum contribution varies. In 2019, 2020 was around $6,500. So an additional 1,000 catch-up contribution. Catch-up is really a tool to kind of help people who are over 50 years old. So that catch-up contribution can be made for individuals, as I said, age 50 or over during the year. Now, there are no income limits for traditional IRA contributions. Nonetheless, there are limits on those contributions for receiving tax deductions beginning at 64,000 modified adjusted gross income, what they call MAGI. And that's for singles, and 103,000 MAGI for married people who are filing jointly. Now, that's for the traditional IRA. Let's take a look at the Roth IRA, the Roth Individual Retirement Account. Now, this is a kind of popular account. It's not always, Roth IRA is not always the best individual retirement account for everyone saving for retirement. Now, because you're funding this account with after-tax dollars, and the growth in the account grows tax deferred, right? So withdrawals are tax-free and penalty-free if made after age 59 and a half and at least 5 years after the account was opened. Now, the maximum contribution is similar to the traditional IRA. It hovers around $6,000 to $7,000 at least in 2020. And additional, again, in this case, you also have a catch-up contribution that can be made by individuals age 50 or over during the year. So the contribution also the catch-up contribution amounts to $1,000. Now, for the year 2020, the full contribution can be made if your MAGI was less than 122 to 125. The Congress constantly changes the Congress and the IRS constantly they alter the amounts because the amount has to be linked to inflation. There's something called COLA, cost of living adjustment, that comes into play when fiscal experts think about the amounts. So married filing jointly can make a full contribution if MAGI is less than 193,000. We're still talking about Roth IRA here. Let's move on now to SEP IRA. All right. So SEP IRA is basically designed for self-employed individuals, for small business owners and their employees. Now, a SEP IRA is funded with pre-tax dollars and grows tax deferred. A SEP IRA is kind of similar to a traditional IRA in that sense. So withdrawals are taxed at ordinary income rates as our traditional IRA distribution. That's what I just said. Now, contribution limits are the lesser of 25% of income, or 56,000 in 2019 and 60,000 in 2020. Let's move on now to 401k plan. The 401k plan is it is a great plan. It has received a lot of I would say press in the last few years, but just because the 401k plan allows for higher annual contribution rates doesn't necessarily mean it's the best retirement plan for your needs, right? So this employer sponsored retirement plans are funded with pre-tax or after-tax Roth contribution. In other words, you can have a 401k plan or a Roth 401k plan, and those will grow tax deferred until withdrawal after separation of service from the employer. So many employers will offer matching contributions when employee contribute their own money through payroll deduction. Now, contribution limit was 19,000 in 2019. So the catch-up contribution of 6,000 for participant age 50 and higher. Now, limits do not include employer matching contributions. So there is a 10%. And this is very important, folks. The IRS will charge you 10% early withdrawal penalty if you withdraw the money prior to age 59 and a half. And the last top retirement plan is a 403b plan. Now, this is kind of similar to 401k plans, but 403b plans are employer sponsored plans with the same contribution limits and matching feature. They're also called tax sheltered annuities, TSAs. Now, 403b plans are typically available through public schools and employers of certain tax-exempt organizations. All right, so folks, I just gave you a rundown of the top 5 retirement plans and how they work, their tax benefits. So the traditional IRA, the Roth IRA, the SEP IRA, the 401k plan, and the 403b plan. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. I hope you are doing fantastic. We are still continuing our conversation around how to choose the best retirement plan that offers the greatest tax benefits. Let's now talk about how to determine which retirement plan offers you the best benefits. Now, before I do this, I just want to give a shout out to all our viewers in the United States. We are constantly remembering right now our viewers and listeners in the state of Texas, in the state of California and Florida. We've heard that there has been a reemergence of COVID-19 cases in those states, and our thoughts and prayers go to the families of our viewers and listeners, as well as the whole population of those states, and the whole United States anyway. So this is we give you a shout out, and also, if you love the clarity and content of this show so far, please consider subscribing to our channel and switch on the notification bell so you can receive in real time information about whether or not we drop the new show. And we do this every single day, usually around 9 a.m. Eastern time and 3 p.m. Eastern Standard Time. Now, also comment below, share this content, and like. Number 2, how to determine which retirement plan offers you the best benefits. Now, before you decide that, you have to go through 3 primary factors, and this applies for everybody. Number 1, your income. Why? Because generally, if you have high income, you would benefit most by making pre-tax contribution. The opposite is also true. So if you are in a low tax bracket, you may benefit most by making Roth contributions. Since traditional and Roth IRAs have income limits, some individuals will not qualify to make contributions. Also, you must have earned income to contribute to an IRA. An exception to this is when one spouse has earned income and the other does not. The employer spouse may be able to make contribution to a spousal IRA. Now, why would you want to go with an IRA if you're making a lot of money? Let's think about that. You want to make pre-tax contribution because right now that you are if you are a high earner, right, you want to basically contribute now, because chances are when you get to 65, you will be in a lower tax bracket. Right now, you are in a higher tax bracket. So if you make an after-tax contribution, you'll be losing a lot of money, right? Think about it. If you're making $200,000 now, and you are probably in the 40% tax bracket, and you do an after-tax contribution, that's a lot of cash going out of your pocket. But if you do a pre-tax, you are really still making money, because you'll be reducing, in effect, the taxable income every pay period. By the time you turn 65, you probably will be in a lower tax bracket, probably in the 25 tax bracket. So you can still, when you do the withdrawals, you will be paying less taxes. That's the first factor, your income. The second factor to consider when determining which retirement plan offers you the best benefits is the availability of employer-sponsored plans. So if you have access, for instance, to a 401k plan, right, or a 403b plan, and the employer is making matching contributions, you should make your own contributions, at least up to the minimum amount to receive the full match. Remember that individual retirement accounts, IRAs, don't have a matching feature. Only 401k if you work in the private sector, or 403b if you work for a tax-exempt organization or in the public sector. Only those two plans have employer-sponsored plans. And it's always very interesting, because I think about this as free money. If you're lucky enough to have an employer who wants to match your contribution, go ahead and max out your contribution so that the employer can get, it's free money. Of course, once they actually give you the cash that they do the matching, they want you to wait a few years before leaving. That's called vesting. Vesting stands for ownership. That's just the legalese here. So what I'm trying to say here is that you can't just work for an employer, work for the employer for 6 months while they were matching your retirement funds, and after 6 months you just want to leave the company. No, they would want you to stick around for a while, so that they want to make sure that you would also contribute to the company. You would add value, and that makes sense. Think about it. It really makes sense. They're giving you money. They're giving you money through retirement matching, and they want to make sure that you are also loyal to the company for a while. So there is a vesting schedule that goes from 1 year to 5 years before you get 100% of the amount they have given you. The third criteria is if you are a small business owner. If you own a business with few or no employees, you may have more option for retirement plans for yourself and your employees. So you got to think about this thing, what I just said, to think about your personal situation. And in that case, what would be suitable for you is a SEP IRA, right? As I said earlier, the SEP IRA is designed specifically for self-employed individuals, small business owners, and their employees. All right? I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweaty Kiwi. Let's talk now about which of the following retirement plans offer the best tax benefits. Now, here are the primary retirement plans and the individuals who benefit most by them. Traditional IRA. This is actually best for individuals this is great for individuals who expect to be in a lower tax bracket in retirement. That's what I just said. Than they are when contributions are made, or those who need to reduce current taxable income. You need to have earned income or a spouse with earned income to make contributions. That's for traditional IRA. Then you have the Roth IRA. The Roth IRA is best for individuals who expect to be in a higher tax bracket in retirement than they are when making contributions. You must have earned income or a spouse with earned income to make contributions. A SEP IRA is best, as I said earlier, best for small business owners and self-employed individuals who want a simple means of maximizing retirement plan contributions, which are potentially higher than other IRA types. And the 401k plan or the 403b plan is best for individuals eligible to participate, and the employer offers matching contributions. It is also perfect for folks whose income is too high to contribute to a traditional or Roth IRA. Now, most 401k plans allow for either traditional or Roth contributions. All right, folks, this is it for today. I really appreciate your attention. We were talking about how to choose the best retirement plan that offers the greatest tax benefits. Just want to quickly give a recap here. So at first, I talked to you about how tax benefits of top retirement plans work, how to determine which retirement plan offers you the best benefits, and which of the following retirement plans offers the best benefits. I'll see you another time, but until then, remember, stay marvelous.